It's almost Christmas time, and that means forecasts. We deliver the big predictions for the market in 2019. Ben, the RBA hasn't moved interest rates for a long time now. What will they do in 2019? Hike, cut, or hold?
Yeah, they're still on hold, Matthew. I think a bit of a deterioration in local economic data during the year. The language might get a bit more dovish.
We think they're probably a hold in 19. I think if they really get worried about the housing market, they want to leave themselves some room for error. There's some things that they can do in terms of easing restrictions on foreign investment in housing, capital requirements for banks, and I think they'll go to those first before cutting rates.
Yeah, I think it's unlikely to think that they'll change what they've done for the last 2 years, which is nothing. I think if anything, the risk is that they might move down, especially with the challenges in the housing market, but I think on balance I'd say hold.
I'm consensus here. I think they hold. The chances are a cut, but I think they don't want to go too low unless things get bad, so I'm a hold.
They're going to hold again, Matthew. They've been on hold since August 2016. The current RBA minutes are still suggesting a hiking bias. We think that's misinformed.
Okay, you're growling like a bear or mooing like a cow for 2019? Equities, up or down?
Look, we're going through what we think is an asset pricing recession at the moment. In fact, I've just finished reading a great book by Howard Marks, Mastering the Market Cycle, and he uses a quote in there which I thought I'd reference. In the real world, things generally fluctuate between pretty good and not so hot. But in the world of investing, perception often swings from flawless to hopeless. And I think that's exactly what we've gone through at the moment. We're in an asset pricing recession. The question for investors into next year is, are we going to see a fundamental economic recession? We still believe that's not the case. And we think this bull market that's been going for 9 years, we've been bullish since March 2009, is going to have a longer duration than most cycles. So we still think there's opportunity in equities.
Over the whole of 19, I'm a bull. I think the first half might be tough. We're going through a slowdown. But I think Australian market's not overly expensive, and I think we can get a rally going at some stage. Might be mid-year onwards, and we'll be up for the year.
I'm pretty bullish on next year. I think the interest rate environment's got more supportive. Earnings growth's going to be okay across the market. Valuations to me look a lot more appealing than they have for a few years. Balance sheets are strong. So I actually reckon from this point the outlook's pretty good.
We're bears in the first half and think that things will probably flush out and maybe end up okay towards the end of the year. We're surprised how quickly sentiment has turned from bullish to bearish, so that's probably the most optimistic thing we can say about markets at the moment. It's hard to build a good bull case for 2019.
It's a moving feast because the base for the year really changes a lot every day. I would say I'm probably going to be bearish for next year. We've had a really, really good run for probably 10 years now, so I just think the balance is that we might be a little bit weaker.
Okay, the market's a discounter, discounts everything in for the future. What's something that it's already discounted into prices that won't happen in 2019?
Yeah, look, this happens every year, and I'm going to say earnings growth. There's still the analysts are saying for earnings growth of around 10% per annum, and I think in a challenging economic environment with some uncertainties around election, I just don't see those earnings coming through. So I think as we go through the year, earnings will get dialed down, and I think that'll put pressure on the equities market.
There's been a bit of movement in the Fed fund expectations over the last 6 or 8 weeks. 3 months ago, the market was forecasting 3 to 4 rate hikes by the Fed next year. We think the big call this year into 19 is there'll be none. We think this December hike this year will be the last, probably for some time, and there'll be 0 Fed hikes next year. We think that has very material ramifications for the US dollar and other asset prices.
Yeah, so I'm going to go. The market is factoring in that Brexit is going to play chaos with a number of local listed companies that have got UK operations. And firstly, I think Brexit might not be as bad as the doomsdays are saying. And secondly, I definitely don't think it's going to be as bad for some of those companies.
Well, it would have been easy a few weeks ago about interest rates in the US, but I think it could be the Australian market where everyone's pricing in now cuts in rates. That's what I feel over the last week. I think they'll stay flat.
Well, the one thing that's got us scratching our heads for 2019 is an old favourite stock of ours, Tesla. I think the market is pricing in profitability for the full year in 2019. The company's never been profitable on an annual basis. We think it's a certainty they won't be.
It's a killer, Tesla.
Sure is.